Your bank can freeze your account without warning. Bitcoin can't. Look, I'm not here to sell you on crypto or tell you to dump your savings into Bitcoin, but here's the thing. Most people still don't actually understand what makes blockchain different from the system we've all been using our entire lives. And that lack of clarity, it keeps you from making informed decisions about your own money. By the end of this video, you'll understand the core difference between how your bank handles your paycheck versus how Bitcoin works, and why that difference matters when rent's due and your account's suddenly locked for suspicious activity. Because right now, with inflation eating into every paycheck and banks charging you fees just to access your own money, understanding how money actually moves isn't just interesting, it's practical. So let's start with what you already know. When your employer deposits your paycheck, it doesn't actually go into your account, not physically. Your bank just updates a number in their database. They're keeping a ledger, basically a fancy spreadsheet that says this person has this much money. And you trust them to keep that ledger accurate. You trust them not to lose it, not to change it, and to let you access your money when you need it. But here's what most people miss. You don't actually control that ledger. The bank does, which means they also control the rules. They decide when you can move your money. They decide what's suspicious. They decide if a transaction gets flagged or frozen. And if there's a mistake, good luck. You're calling customer service, waiting on hold, hoping someone believes you. Now here's where blockchain comes in. Bitcoin doesn't use a bank. It uses a shared ledger that thousands of computers around the world maintain at the same time. No single company controls it. No CEO can shut it down. No customer service rep can freeze it. When you send Bitcoin, the transaction gets broadcast to this entire network. These computers, called miners, verify it's legit, then add it to the blockchain. That's just a permanent record of every transaction ever made, chained together in blocks. Once it's recorded, it can't be erased or changed. Let me clarify something important here. This isn't about Bitcoin being better than banks. It's about understanding the trade-off. With a bank, there's a middleman. That middleman can reverse transactions, freeze accounts, and help you if you get scammed. But they also charge fees, control access, and can shut you out. With Bitcoin, there's no middleman. You control your money directly through something called a private key. Think of it like a password only you have. No one can freeze it, no one can take it without that key. But if you lose the key or send Bitcoin to the wrong address, there's no customer service to call. It's gone. The real problem starts when people don't understand what they're giving up in each system. Your bank account is insured by the FDIC up to $250,000. Bitcoin isn't insured by anyone. Your bank can help if your card gets stolen. Bitcoin transactions are irreversible. Your bank might charge you overdraft fees and hold your paycheck for 3 days, but they also follow U.S. laws that protect consumers. Bitcoin doesn't care about laws. It just follows code. And that's the core difference. Banks run on trust in institutions. Bitcoin runs on trust in math. So why does this matter to you right now? Because more employers are starting to offer crypto as a payment option. Because apps like Cash App and PayPal let you buy Bitcoin in seconds, because your friend who's deep into crypto keeps telling you it's the future. And if you don't understand the actual difference, not the hype, not the fear, just the mechanics, you can't make a smart decision about whether it fits into your financial life. Let's be clear about what blockchain doesn't solve. It doesn't fix your rent being too high. It doesn't erase your credit card debt. It doesn't make you rich just by holding it. And for most everyday transactions, paying bills, buying groceries, getting your paycheck, traditional banking is still easier and more practical. But what blockchain does offer is an alternative, a way to move money without asking permission, a system that works the same whether you're in New York or a country where banks collapse every few years. For some people, that's powerful. For others, it's unnecessary risk. Here's the bottom line. Blockchain and Bitcoin aren't replacements for your bank account. They're a different tool with different rules. Banks give you convenience, protection, and a system you already understand. Bitcoin gives you control, but it also gives you full responsibility. Neither one is perfect, both have trade-offs. The real security comes from understanding the rules, even when they're stacked against you. If this cleared things up, hit subscribe. We break down money topics like this every week. No hype, no BS. And if you've got questions about how blockchain actually works in practice, drop them in the comments. I read all of them. See you in the next one.